Hello and welcome to 11FS Spotlights, live from Lend It USA 2022. My name is David Brear, and in this show we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry to try and understand what is it that gets them going, growing, and what they really think the future of the industry will look like. On today's Spotlight, I am delighted to be joined by Jeff Keltner, who is the SVP at Upstart and podcast host of Leaders in Lending. How's it going, Jeff?
It's great. How are you doing?
Good, busy, like dealing with jet lag in a good way, like predominantly through caffeine.
But thousands of people and lots of noise.
And it's not helping. Yeah, it's definitely not helping. But you know.
Run in the morning is my secret for travel. If you get up and run in the morning, then you feel better.
Really? I had 4 hours of meetings instead of a nice run, but like that, I should have done it that way.
I got up at 6:30, went on a run before my meeting started, and it makes me feel better.
Amazing. Well, next time I'm here, I'll try that tip potentially. But do you know what the problem is I bring a bunch of different types of trainers, but none of which are suitable for running in. You know what I mean? It's all for show, really. But
you got to bring one in the bag that's just for the running.
It's true. Next time. So what we're going to be doing on today's show, we're going to be talking about a little bit about your background, your career, and your role and the future of where you really sort of see lending going. Maybe if we start off, can you give us the 1 minute pitch for Upstart? What do you guys, for an international audience, what do you guys do?
Yeah, we are an AI lending marketplace where we really work with banks and credit unions to help them both find consumers who need loans, primarily unsecured loans and auto loans, and then help them provide better decisioning. We believe that many more people are creditworthy than are understood to be so by credit scores. And then a very simple onboarding kind of origination process, highly automated. About 70% of the borrowers that our customers serve have no kind of manual verification process. They can complete the whole thing in less than 30 minutes. So we kind of focus on working with our partners in those key areas.
That's amazing. So, I mean, is that the main sort of problem you're solving in that sense, in terms of that expedience of actually doing it? Because, I mean, traditional lending in that sense is not 30 minutes, is it? It's
not. We really came into the world believing that the credit underwriting problem was the core problem. We did the survey with TransUnion that showed that 80%, this is American specific, but 80% of American consumers have never defaulted on a credit product, and yet less than half have a prime credit score. And we just thought we can use better data and analytics to find the rest of the people who are credit worthy, but we don't see that way as an industry. And then we kind of happened upon hey, getting somebody from we think you're credit worthy to you've got a loan is really hard and arduous. And how do we reduce the friction, cut out the processes? And so we really started applying our machine learning skills to that segment. Secondarily, that was a learning for us as we entered the space, but probably as much value for our partners as the credit decisioning in many ways.
Yeah, it's a strange one from the process from a consumer's perspective, isn't it? You're putting yourself out there, you're putting out the data there. It's an odd sort of commitment moment, isn't it, in that sense?
It is, and we've often thought about when do you ask certain questions. Like maybe you have to say you have to earn the right to ask a question. So for instance, many of our consumers will validate their income by connecting a bank account, but they typically don't do that until after they've gotten an offer, said, hey, I like the terms, let's move forward, because you kind of brought them to the point where that release of information feels like it's reasonable and adding value, as opposed to asking, like, first thing, what's your social security number? I'm not telling you that. That's crazy.
So many people have told people not to give away that information. So it's
that's right.
You have, like, say, the trust, the
you have to build it over time and earn it. Yeah.
That's interesting. I mean, this isn't obviously the first thing you've done. You've had a super interesting career, like Google, IBM, various different places.
Yeah.
How did you get through that? And actually, what's your experiences through those different organizations?
Well, it's been an interesting trend. So I got a computer engineering degree and promptly decided to not be an engineer, which my parents kind of looked sideways at, but kind of have built my career at the intersection of technology and its application to different industries. And so I started at IBM. So I kind of went from the really big 150,000 person company where I was just kind of selling hardware. And then I made my way to Google right before they launched what now is Google Cloud, kind of first Gmail for business, Gmail for schools. And so I was kind of there before it was launched to lead the charge on that. And that was fascinating, the application of tech to the educational experience, how we could kind of level the playing field. And so it was the guy who ran that business, Dave Gerard, who started Upstart. And so when he left Google was maybe 6,000 people when I joined, so 150,000 to 6,000, and I was about the fourth person at Upstart. So that was a real transition. But to me, there's this really interesting part of any industry, which is not, at IBM we used to call it innovation and invention. Invention was the kind of like creation of a new technology like machine learning. And innovation was like, what do I change in the real world by applying that technology? And I've always enjoyed being at that moment when a new kind of technology is changing the way an industry operates by applying it to that industry.
Yeah, it's amazing. I mean, that's not normal in that sense. I don't mean that in a weird way. And it's a strange accusation to make, isn't it? But so many people just fixate or are fascinated by technology, not necessarily the application of that to problems. And from your perspective, having been like hardware side with IBM and obviously Google is it's a software company. It's what they build software at scale. Seeing both sides of that problem in that sense must have been fascinating as well.
Yeah, it was fascinating to see. And I worked on both software and hardware at Google. I worked on the Chrome devices as well. And so it's really interesting to see the difference. Obviously, hardware to build is a much harder problem. I remember I was sitting in a meeting. This is one of the reasons I left Google. I was sitting in a meeting to prep for a meeting, to prep for a meeting, to prep for a meeting. But, we were building the Chrome devices. We were going to launch them. And we said, what's it take if we're successful? We said, well, we're going to burn like a $10 billion cash hole. We might have to go to the CFO and ask for approval to do that. And so I think that's a very different thing than software, where you can build and iterate much more fast. So it's very different things. But at the end of the day, they both really. Gartner has this thing they call the hype cycle. You've probably seen. And we don't have to get
prior to 11FS, I ran Gartner's global digital banking capability, so I'm very aware of the magic quadrant.
The hype cycle. So I think the hype cycle is a great example where technologists tend to focus on what the technology can do. And you get really excited and you go, it's not actually being used to do much today. And there's this really hard process of like getting, particularly in a regulated industry like financial services, how do I actually get this technology deployed in many financial institutions? What you'll find is they've got very advanced technology, but it's in a lab. They go, well, we know we can do so much better, but it's not in production because we got to get over the regulatory hurdles and the risk hurdles. And so to me, that's the most fascinating part. And the part where you really start making a difference in the world with the technology, not just intellectually building an interesting thing.
Yeah, that's so true that most problems have been solved. It's just the getting from a good idea or an innovation to executing a customer is like really where the challenge is. There's many organizations, I'm sure, here today that struggle with that in terms of that process. But I guess with your experience, this is something, again, Google particularly building products at scale, shipping, continually sort of getting those things out there. It's not really an ideas problem anymore, is it? It's execution.
Well, there's a saying in Silicon Valley, first-time founders focus on products, second-time founders focus on distribution. And it is, we need new ideas. So I don't want people to think like all the good ideas are gone, but the next billion-dollar companies, the technology's already been invented. It's can I go and tackle a market with it? Can I go and do something interesting? And Google struggled with this. I would say Google Cloud was very slow, and they probably had the best technology for years and years, and they were getting just destroyed by Amazon and arguably by Microsoft with Azure. And it was just we didn't have a good sales team. We didn't have a good approach. We were unwilling to bend on all the kind of go-to-market distribution, wouldn't build the things the customer wanted because they weren't intellectually the things we wanted to build. And that's a real challenge for a founder, for an innovator. And it's a very different skill set to say, how do I go take this technology and really make it useful in the market and then go sell it to the market versus how do I build it? And that's, I think, underappreciated by many about the challenge of entrepreneurialism is it's not really just about the great idea. You think about Mark Zuckerberg and the idea of Facebook. It's like lots of people had the idea. It was the execution, the distribution, the ongoing management of that market that really made Facebook, Meta, what it has become.
Yeah, and I guess speaking of distribution, that's products, that's services, but it's ideas as well. The reason we're doing this is distribution of this conversation to as many people as we can get it to. Talk to us a little bit about your podcast, because I presume that's the thesis of those types of things as well.
Yeah, podcasting host wasn't on my bingo card for career progression. It wasn't a goal. But when we really, at Upstart, we had been building our technology focused really with one business partner, one bank partner. We said, hey, we really want to go out and start working with lots of banks, lots of credit unions. We need a way to reach them and speak to them and have an authentic conversation. So we launched a podcast we call Leaders in Lending, and we invite a lot of those executives to the podcast. And I try really not to make it about our products, our services, but about what are you seeing? What are you doing? What are your challenges? What's going on in the space that people can learn from? And I think people really crave that real world, not sales pitch or whatever, like what's really working for you, what's not. And that's what we try and make the podcast about. And I bring in both executives from the industry and then also fintechs, people I think who most of the banks go, I want to be doing something like that. I don't know how I get there. Like, what can I learn from their experience that I take forward? So that's been, I enjoy that very much because I get to have these fabulous conversations and I learn from every one of them. That's a lot of fun.
It's fascinating that, isn't it? The same problem in multiple organizations can be being approached or tried to be solved in very different ways based on the material makeup of that business, but it's all just people, really, isn't it? It's all culture, it's all these things. The technology part of it sort of fades away a little bit in that sense, doesn't it?
It does. I mean, the technology is rarely the problem for a financial institution. Like, they have technology problems, but it's not like finding the right tech. It's how do I get my company on board? How do I get my risk committee on board? How do I align tech strategies across lines of business that maybe are functionally totally separate P&Ls? And yet I need to integrate across them to serve the consumer better. And those organizational problems are often foundational and really the ones that slow down our ability to adopt or leverage technology to a full extent. And so we have a lot of fun conversations with that. And I often ask, like, it's great in theory, but tell me, how do you actually, how do you get the organization on board? And particularly for a bank or credit union that's often run by multiple committees that have overlapping interests, but I would say there's many people who can say no to a good idea and few people who can say yes. And that's a real challenge for any organization to overcome.
Yeah, it's funny, isn't it? The two major barriers, it's predominantly, firstly, procurement, secondly, culture. You get through the procurement barrier, you're facing the cultural barrier. And even then, the amount of billion-pound transformations, billion-dollar transformations that people embark on, those two things can pretty much kill off most things, which is quite scary, isn't it?
It is, and it can lead you down the wrong path, not just kill it off, but have you execute and get the wrong thing. Or one of the things I see today in the industry is this tremendous focus on the phrase digital transformation. And I see so many digital transformations that are so focused on the digital. I had one of my guests who said, every digital transformation has to start with a process transformation. And too often I see us digitizing the legacy process as opposed to building the process we can on top of the newer technologies. And that's one of those times when your culture said, hey, I've got this loan officer in this process and this thing, can we make it digital? And go, well, don't make it digital, make it better using digital technology. And so you've really got to be careful what you shoot for, because the organization may deliver it and it may not be the right thing. And that's where I think you see so many of these, you've got the wrong set of incentives or objectives or measurements, and the organization delivers on that. It's all digital now, boss, but it's not as good as what other people have built who started with a different assumption. And you got to be really careful of that. And that's not a technology problem. That's a culture problem, an incentive problem, an alignment problem.
Yeah, people sort of replicating what they know rather than the art of the potential. Yeah, we talk a lot about the difference between digitized and digital, and it is fundamental. And the chasm between those two things is huge. But to that point, I guess technology is allowing us to move to that digital sense. And obviously, a big part of what you guys are doing, both from a scoring and from a risk perspective, is using artificial intelligence.
That's right.
Tell me a little bit more about that.
Yeah, I think many people look at credit files, and we all use a credit score. Most people rely heavily on a credit score. And I think of a credit score as a 3-digit version of a credit file, which has 1,000 pieces of information. And it turns out, if you actually are willing to look at the 1,000 pieces of information individually in the context of a particular individual and a particular loan, it just many more people are worthy of some form of credit than we give them. And it's funny, some people think the risk industry is not broken. If you are delivering losses to expectations, to a risk manager, you go, that's great, I wanted 3% losses, I got 3% losses, mission solved. And I'd say, well, you solved that by turning away 80% of the people you turned away were good borrowers. And that was a problem we really tackled. And we think we're just in the very beginning stages. My co-founder, Paul, has this saying, he likes to say that every loan that was approved and defaulted never should have been offered. And every borrower who pays back paid too much in interest. Because ideally, you only offer loans to people who pay back, you charge them all the lowest possible rate. And when you think about that, 0 defaults and everybody paying the lowest possible rate, and something like an 80% approval rate for most products, you realize how far away we are from that. And we just think the application of large sets of data with machine learning to kind of make sense of them, you can really bridge a large part of that gap between how creditworthy people really are on average and what we think of them as based on this highly reductive credit score concept.
Yeah, it's interesting, isn't it? Banking is, and I'll get some flack for this, but banking is oddly bad at risk. Insurance is very good at risk. The whole industry is predicated on it. But so this is about sort of reducing risk in that sense by using much larger data sets.
It's about understanding risk, right? Like every one of our lending partners that leverages our technology can choose to increase risk knowingly and be properly rewarded, or reduce risk. But I think too often we focus on eliminating the best risk. People I know at financial institutions say they're kind of like lawyers. The lawyer's job is not to tell you what to do. It's to tell you what the risks are and allow the business to make the smart choice about what risks to take. And I think risk management in a bank needs to be the same, but too often our job is, eliminate. And that's not the goal. You should properly manage. I talked to one lender, we've never had a default. So are you really in the consumer lending business? No defaults is you're not pushing the envelope enough.
They've done like one loan or something.
Well, they did a lot of loans, but if you're only lending to people who you know for sure can pay you back, you're leaving a lot of people out that are good. And that was really, we see a ton of opportunity in that space. It's just, I think there's such an amazing opportunity to have a financial system that's more inclusive, that's more accessible, and it's a moment when we can make those things real. And that's really our mission, is to say, how do we go and take this credit environment and make it a more accessible, more inclusive environment for everyone.
Yeah, and that context, as you say, in terms of what people are using this money for, the lending, it's not all people buying big TVs, it makes massive difference to people's lives, doesn't it?
It makes a huge difference to people's lives. And sometimes when we focus on conforming mortgage, you're talking often about lending. Most lending happens to people who least need it in some ways, right? And crypto lending is the worst of this right now. It's like people say, you guys should get into crypto lending. Crypto lending is like millionaires who want to buy a Ferrari without selling their Bitcoin. That's great. But like the people who really need it are in a different place. And this is again where I think the credit score is so reductive, because I've got a pretty good credit score, but it's the same credit score on a $500 loan and a $5 million mortgage. And I'm just not the same credit risk for those two things. And so moving beyond that construct to a place where I can say, let me understand your risk for this smaller loan that's very meaningful to you, and can I go and make that less costly to originate by automating a lot of processes with machine learning, better understand the risk and approve more people. That has the opportunity to really open up opportunity, mobility for people by giving them access to credit, which we really think was a foundational element of what it takes to achieve success in life over time.
Yeah. And how much do you see that as we sort of talked there about distribution of lending products and everything that goes with that. Obviously a big benefit of using more artificial intelligence or sort of more narrow machine learning in that sense is removal of some of those biases potentially in the decision making around those pieces. I mean, that seems like an obvious real benefit in that sense as well.
I'm glad you see it that way. We tend to agree. There's certainly a lot of concern that gets expressed around the potential for AI to embed bias, to create bias. What I think is often forgotten is how unevenly distributed the current world is, and how when you use credit scores or income as a metric for creditworthiness, there's a lot of bias in that. And we've really shown the ability of our models to increase the accessibility of credit, to increase approval rates and decrease the cost of credit for every demographic. And we think that's really important because there is a lot of bias. And I was at a conference recently and somebody said, well, I can't believe you're going to give up on the character C in the traditional credit. And I said, they're trying to tell me that I'm creating bias by not having a human being sit across the table and assess the character of an individual. And I think that's just crazy. I think that is a scenario that's much more likely to create bias than one where you're using historical behavior of that individual and statistics to determine what it really tells you about their likelihood and ability to repay a given obligation. And we've seen that play out in our portfolio. So we think it's a huge opportunity to reduce bias in the industry and increase inclusivity. And I think we're going to have to continue to prove that out and convince people that your intuition is right, and that's what we really can do.
Yeah, it feels like a big leap in that sense, in terms of where it is, and that balance between the human distribution but the machine consistency in that sense makes a great deal of sense to me. I mean, this is obviously a problem that is not solved, and actually the opportunity to really be able to serve such a bigger and bigger base. I mean, what's next for you guys in that sense? Because the backlog must be long.
Yeah, the backlog's very long, so we're hiring. But I will say, generally, what's next for us, we started in the unsecured consumer lending category in the United States of America. That is the smallest market in terms of credit in the U.S., and certainly a small portion of the global population. And so, we've expanded from that unsecured credit into automobile refinancing, automobile purchase lending. We have nascent efforts in small, medium business and mortgage and very small dollar lending, something that could kind of replace payday. So those are all things call them the medium-term horizon for us. In the long term, we certainly look at the globe and kind of the ambition of how do we take this capability and make a better lending system for everybody, for every product, everywhere in the world. And that's a big mission, and it's going to take us a long time, but that's where we think we need to head over time.
That's super cool. Congratulations. I mean, it gets you out of bed every day with something interesting to do for sure, right?
It does. We have one of the things we do. We have a all hands meeting every Friday, and we read out a review from a borrower who got a thing. And that I sometimes it's in finance, you can so often get caught in the numbers, and the spreadsheet and the profit margin and the loss rate and the whatever. And it's like almost like a video game and you're twisting dials, and being grounded to the human beings that you're serving and that you're helping and understanding how you're making their lives better. We do that through kind of reviewing customers, talking to people, but it's so important because it is what gets us out of bed every morning. It's kind of going, hey, we can make the world a better place. We can make the financial system more inclusive for lots of people. And when you see that real impact on lives, it's really powerful.
That's super cool. Something we're rapidly running out of time, but something we always like to kind of talk about at the end of it is more, I guess, from your perspective. I mean, great career, Google, IBM, Upstart. Tell us a little bit more about what would be the advice to yourself back in the beginning. There's a lot of people who listen to this who are just getting into fintech, just getting into financial services. It's nice to look back and feel like everything was strategic, isn't it? But there's a lot of luck in there.
Well, so I'd say two pieces of advice, because I think everything was strategic. We started out with a totally different product and business model that did not work. There's this fine line between understanding when persistence is brilliance and when you're beating your head against a wall that's not going to break, and learning how to see the difference and pivot, being honest with your assessment, optimistic about your chances, but realistic about the risks is important. The thing I would tell my younger self, maybe the me that was leaving IBM for Google that felt risky, or the me that was leaving Google for Upstart that felt way riskier, was taking that leap is rarely as risky as you think, and is more rewarding than you can imagine. And so I've always tried to be, from a career point of view, in a place where I feel like I like to describe it as struggling hard to tread water, where I feel like I'm able to do the job, but kind of go, I can't believe you think I'm capable of the thing you want me to do. Like, it feels a little outside my reach, or at least outside my comfort zone. I've always tried to be there, and I've always found that both from a company point of view or from a role point of view, when you feel stretched and a little uncomfortable, that's the place where you're learning and making the biggest difference. And that's what it felt like going to small companies. So I would say take the leap, do it. There's, the Chinese have an old saying that the best time to plant a tree was 20 years ago, and the second best time is today. So when there's this idea you have, or that opportunity, my advice is embrace it and take the leap.
Follow the fear, right? It is an interesting one. I've left jobs because I'm not nervous before meetings anymore. And actually, there's something. Is that? Do you think that's like a learning thing? Because almost like you're. I think anybody who feels like they're standing still, you lose that passion. Right?
That's why I feel like I always want to be. Maybe I describe it better skiing than like treading water. But like, if you're not falling down, you're not learning. Yeah. And I kind of feel that way in my job when I get to a place where I go, I know how to do it, I do it well, but it's kind of easy. I want to go to a place where I go, I feel like I can figure it out, but I don't know how to do it. If you ask me for the plan to fix the thing, I don't know it yet, but I feel like I can find it. That to me is that kind of feeling where I'm excited. When I get to the point where I'm going, yeah, I know what the next one is, and it's going to be like this. Like, I'm not learning anymore. You can have a good job and have a good career and make good money in that point, but for me, it's always been about, how do I grow and learn and do something that's challenging me? And so I like going into meetings going, I don't quite know how to do it. That's what, to me, makes it exciting and fun.
Yeah, absolutely. I'm completely with you on that one for sure. All right, we're running out of time. So, Jeff, where can people learn a little bit more about you, about Upstart, about your podcast? Give us where can people come and find you?
Yeah, you can find us at upstart.com. You can find me on LinkedIn, probably. The marketing team's got me all over the place, so I'm not hard to find. And the Leaders in Lending podcast is on wherever you get your podcast, Spotify, iTunes, whatever. It's everywhere. So do a quick search and you'll find us, and we'd love to talk to you.
Awesome. Well, thank you very much for coming on. That's all we have time for you for this week, though. You can find 11FS and Fintech Insider on pretty much every social media channel at this stage. Just search for us. If you like this episode, subscribe to the 11FS YouTube channel. There's all of this episode and every other episode of this show that you can find as well. That's all we've got for you today, though. So thank you very much for joining. Speak to you soon. Bye.